Good morning and welcome to Top of the Morning by Mint, your daily shot of sharp business intel, global trends and market movers. It's Monday, June 16th. I'm Nelson John. Well, it's been a week of big swings. Markets dipped, Modi doubled down on India's digital dominance, and gold nearly touched 1 lakh rupees. Plus the Air India probe begins and oil's got everyone on edge. All that and more right here on Top of the Morning. It was a week of jitters for the Indian market. As tensions flared between Israel and Iran and oil prices spiked, investors rushed for cover. The Nifty 50 ended the week down 1.14%, closing Friday at 24,718. Heavyweights like HDFC Bank, Reliance and SBI led the fall. Sensex dropped 1.3%. Vinod Nair from GeoJit summed it up. Global risk-off sentiment overshadowed early optimism from US-China trade talks. Safe haven assets rallied, gold, US bonds. And equities took a backseat. So what's next? Brace for more volatility. Here are the 5 big triggers. Israel-Iran conflict. Markets are watching every headline, especially with US and UK now directly involved. US Fed meet June 16th to 18th. No rate cuts expected, but all eyes are on Jerome Powell's tone. The inflation data looks soft, but tariffs may muddy the waters later. Crude oil surge. Brent crude jumped 12.5% in a week. Higher oil could stoke inflation and hurt profits, especially in paint, cement and transport. FPI outflows. Foreign investors pulled out 4,812 crore rupees so far in June on high valuations and a weakening rupee. Macroeconomic data. India's WPI, trade balance, US jobless claims, Eurozone inflation all due this week. Add in the G7 summit and you've got a loaded week ahead. Air India crash probe begins as the nation grieves. We owe it to the victims to understand what went wrong. That's the message from India's Civil Aviation Minister as a high-level panel led by the Union Home Secretary meets today to begin its probe into last week's devastating Air India crash in Ahmedabad. The Boeing 787 bound for London Gatwick plummeted shortly after takeoff on June 12th, killing 270 people, including former Gujarat CM Vijay Rupani and injuring several others on the ground. Just one passenger, 28-year-old Vishwas Kumar Ramesh, a British national of Indian origin, miraculously survived. The committee has 3 months to file its report. It will not replace ongoing technical investigations, but will focus on improving emergency protocols and aviation safety guidelines. The panel will access all records from black boxes to ATC logs and maintenance files, said the Aviation Ministry. A second black box, critical to understanding what happened in the cockpit, was recovered on Sunday. Prime Minister's Principal Secretary Dr. P.K. Mishra praised the swift response by local and national agencies. DNA testing has identified 47 victims so far, with 24 bodies handed over to grieving families. The nation watches, hoping answers will follow. Gold is knocking on the 1 lakh rupee market, and yet market experts say don't look away. In fact, they're urging investors to embrace the shine, especially through gold ETFs and multi-asset funds. On June 13th, gold surged 1.6% to 99,058 rupees per 10 grams, reacting to rising geopolitical tensions as Israel launched a military operation against Iran. That spike came on top of a 38% rally over the past year. With the dollar index dipping, weakening rupee, and global conflicts casting shadows over stock markets, gold is back in favor as the go-to safe haven. Naveen Mathur from Anand Rathi recommends adding gold slowly through SIPs in ETFs, calling it a smart, passive way to hedge risk. Gold should ideally be 10% of your portfolio, he says. And investors are taking note. Gold ETF assets have surged 88% year-on-year to nearly 59,000 crore rupees. Devansha of Axis Mutual Fund agrees the upside might not be over yet. With dollar weakness and global uncertainty, gold could still move higher, he says. Meanwhile, central banks are quietly dumping dollars and stacking up bullion, fueling what some call A global de-dollarization. All signs point to gold staying golden. India is not just growing, it's leading. That was Prime Minister Narendra Modi's message to global business leaders at the India-Cyprus CEO Forum on Sunday. From highlighting India's booming digital economy to pitching its futuristic manufacturing push, Modi laid out a confident roadmap. 50% of the world's digital transactions happen through India's UPI, he said, adding that talks were underway to extend UPI services to Cyprus, just like India did with France. Modi also celebrated a rare political feat, a third consecutive term in the office. It has happened after 6 decades, he said, tying political stability to economic progress. India, now the 4th largest economy, is sprinting towards 3rd place, backed by over $100 billion in annual infrastructure investments. The newly launched manufacturing mission aims to make India a global hub for electronics, semiconductors, biotech and green innovation. Maritime ports, shipbuilding and civil aviation are also key focus areas. And innovation. Modi says it's the backbone of India's economic rise. Our 1 lakh plus startups sell solutions, not just dreams, he said, underscoring India's transition from a service-heavy economy to a tech and manufacturing powerhouse. India's growth engine is revving up, but not without a warning light. According to CareEdge ratings, India's gross domestic savings dropped to 30.7% of GDP in FY24, down from 32.2% in FY15. Primarily due to a steady decline in household savings, now at just 18.1% of GDP. That's the 3rd straight year of decline, and it matters, because household savings are the bedrock of domestic investment. At the same time, households are borrowing more. Financial liabilities surged to 6.2% of GDP, nearly double of what they were a decade ago. But here's the twist. Public investment is booming. The centre's capital expenditure hit 10.5 trillion rupees in FY25 with a strong start to FY26, already hitting 14.3% of its annual Capex target in April alone. The government has earmarked 15.5 trillion rupees in effective Capex for FY26, marking a 17% jump over last year. On the trade front, non-petroleum products export rose 6% to a record $374 billion, led by electronic goods, even as FY26 forecasts hint at a 0.8% dip. Meanwhile, rural demand looks upbeat, backed by better farm prospects and wage growth, while urban consumer sentiment remained subdued. Savings may be under pressure, but public spending is stepping in to fuel the investment cycle. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a great day.